Hey everybody, hey, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Friday, ladies and gentlemen. Look, we had a very busy week. The week has been dominated by NVIDIA and NVIDIA earnings and NFPs. About all this and a little bit more in the webinar, because this is the preview for the webinar, so hopefully you'll stick around, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today, ladies and gentlemen, is the 21st of November, and what I want to say is the Friday. Yes, it is the Friday. Well, actually, nothing special with this Friday. It's just a Friday, but actually, we're all looking forward to the end of the week, so that we could start our weekend. For those, of course, who are not working during the weekend, for those who are working during the weekend, well, I hope you're, having enough rest as well. Ladies and gentlemen, look, welcome. We managed to make it through this week because it has been a very, very interesting one. Again, since I've started running these shows, I think every week has been an interesting one. Well, we know that since someone took the Oval Office, and every week has been an interesting one. But the markets, like I said, are following the game. And look, we had NVIDIA earnings. It was a great number yesterday. Fantastic activity to the downside. I mean, we'll talk about all that. Yesterday we also got the NFPs, but that could be part of the problem. And this is what I talked about in one of my videos. But yes, I'll pick up on that as well. So yeah, ladies and gentlemen, I hope you are enjoying yourselves. I hope you have been enjoying yourselves throughout this whole week. Let's before we jump into the markets, we need to quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation, and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I'm going to put my usual good morning in the chat room. Good morning, everyone. Good morning. Oh, made a grammar mistake in here. Good morning. There we go, everyone. So, ladies and gentlemen, as always, I keep on saying this show is meant for everybody to kind of interact. I mean, look, if there is something that you want to discuss, you want to ask, feel free, throw it out there, and we can pick it up during the live show. Look, also, before we go any further, as always, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, the economic calendar. So, just very quickly, I'm going to run through the stuff that is happening or happened today, this morning already. So, we got the preliminary S&P Global Composite Manufacturing and Services PMIs from Australia. Yeah, those came out on the better side, especially the manufacturing number, which managed to jump back into expansion territory. I think that's a great moment here for Australia. Look, in general, Australia is one of those countries that kind of didn't really feel too much heat this whole year. In terms of from the economic side, it seems like their economy is kind of okay. They're not really getting into the headlines much, but I look, the RBA seems to be doing a good job. Okay, at least on paper. I'm judging probably from the fact that at least on paper it looks okay. Okay, maybe somebody can say, but a lot of countries look on paper well. Yeah, but there is this little also image thing, with Australia. Somehow this country is managing its books correctly. At least it looks like that. For those who are from Australia, of course, they can tell me that maybe it's not correct, but I'm judging look, I'm judging from all the countries when I look at them. I'm judging all of them basically from, I'm comparing them to each other. Although, again, somebody might say, but you cannot compare, it's not really like for like. Well, we have to compare somehow, and that's probably the main way how to do it. Look, in general, like I said, numbers are very interesting here. So yeah, I think we'll see. I want to see how it's going to continue going further. Now, Japan. Japan released its kind of, I wouldn't say like a data dump, but a lot of information released. Yes. Core inflation year on year came out higher, 3%. Headline inflation as well, 3%. So above previous. So we stepped into that 3% zone now. And the question is this going to be just up and away? If it is, then the Bank of Japan will have to intervene going into into the December meeting. Now, also the news that came out. Oh, by the way, apart from that, S&P Global as well, composite manufacturing and services PMIs, the preliminary ones, those came out. So the composite is 52. The everything seems to be on the higher side, apart from the services, kind of flat. So okay, that's at least not lower. But look, the big news from Japan. Actually, you know what? I'll get to that point in a bit because I need to jump into a chart as well. So today, going further, we also have these composite and services, manufacturing and services PMIs from the Eurozone, from Germany, all preliminary, UK as well. So we're keeping an eye on that one. We have the Federal Reserve bar speech today. This is something to keep in mind because again, we need something to to have a market moving event of some sort. We have also from the US, the S&P Global Composite Manufacturing and Services PMIs coming out, so keep that in mind. Canada retail sales are coming out. Something to also, if you're trading Canadian dollar, just keep an eye on. But then kind of that's it in a way. Yeah, Michigan consumer expectations. Now that could be an interesting moment here. Consumer sentiment, that's the final one. So yeah, it's currently just kind of below, the forecast is below previous numbers, so which is not very good in a way. Look, but also if you're watching Bloomberg, for example, not an advert for them, but Stephen Myron is going to be talking with them, so it's going to be interesting because that figure right now, if you don't know who that is, it's one of the newly appointed Federal Reserve governors, and he's going to be speaking on Bloomberg today, so check it out. I think it's going to be a 1:30 GMT time. I think need to double check that, but yeah. So basically, if you don't know who that guy is the guy who's really, really strongly in favor of the cuts. And I think that, the recent NFP numbers, which came out yesterday, I think it will be a good point for him to stand, kind of to stand his ground. Because yesterday, if you've missed the news, yesterday we got the NFP numbers for September, and those came out fantastically, a little bit more than 2 times the forecast, but the August figure was a problem. Look, I'll get to the point. I'll jump into my indices and I'll pick up on these major events. So as I kind of have the charts here in front of me. So first of all, Nikkei is drifting lower today and has drifted lower today. We're testing the lower side of the Bollinger Band here, and we're just a little bit above that 50-day EMA shown here as the green line on my chart. So I think that I'm going to keep an eye on that line. The fact that we're indicating a potential further down move. That's a little bit worrying for Nikkei bulls. Also, the fact that what we're building up here is also a little bit worrying. We're forming something of maybe a possible descending triangle pattern, and which means that according to all the T rules, such patterns tend to break to the downside. However, the big news. So the government of Japan are announced a, let me just get the numbers right here. So the cabinet approved 21.3 trillion yen stimulus package aimed at boosting economic growth and supporting households squeezed by inflation. So basically, this is the package which is the largest since the COVID-19 pandemic, which previously exceeded that 13.9 trillion yen stimulus package. And if you're wondering how much is that, you know, you can always how to say it, convert that, you know, just out of your curiosity. Let me just do that. So let me just, let's say, what was it? 21.3 trillion, 21.3, actually 21.3 trillion. Let me just get the numbers. Actually, I think it's going to be worse than that. 20. Yeah, let's see. Into euro. Let's convert that into euros. That's yes, 11.6. 116 billion of euros. Congratulations to Japan. This is gonna, of course, something that could lift the Nikkei back up here. But look, what can I say? For now, the question for me is, this is going to be a temporary fix, of course. This is going to be something that, you know, they will try to boost, keep the market afloat. And they're doing it now because they know that in December, on the 16th of December, let me just double check the dates here in Japan, interest rate decision, I think is going to be the 16th. BOJ, 19th, sorry, 19th of December, we're going to get the BOJ interest rate decision. Now, we are expecting a 25 basis point increase in there from 0.5 to 0.75. Look, it is something that, you know, the bank wants to do in order to maintain inflation, because inflation is now above by 50%, basically above the BOJ's target of 2%, which again, it's not something, you know, that they want to see, and nobody wants to see that. And what I said to you before, I think in one of the shows, that let me just open up the chart for inflation here. Let's go with the core launch chart. So this is the interesting bit. So look, during COVID times, if we saw in Western cultures, Western economies, that inflation kind of, you know, spiked really hard in 2020, and you know, but Japanese inflation was kind of remained kind of stable, you know, below 1%. So for Japan, such an increase is really not good, and I think that this is becoming a little bit of a problem. So they will have to, like I said, they will have to increase interest rates. Again, this is the traditional, conventional way of dealing with inflation, because somebody might argue maybe, you know, we should go other ways. But I think that Japanese economy is quite unique, and I talked about this already. That it is a unique one, and I think that traditional economics do work in there, at least for now. And I think that the interest rate hike could be welcomed, you know, could in a way help stabilize the economy. Of course, we're going into other problems or issues in a way, because we're kind of getting rid of the whole, or not getting rid of yet. So as we could be closer to getting rid of the whole yen carry trade, where, you know, investors used to borrow in Japan and then put them somewhere with a higher interest rate, you know, savings account or whatever, somewhere abroad. And that, of course, that was a great, you know, for many years that was a big deal. Now it seems like we're kind of getting to the point where we're not going to see that. And this is the thing, this is where, you know, the issue arises in a way, because Japan holds a lot of US debt. You know, let me just check who holds US debt by country. US debt holders by country. Because I'm not going to be surprised. The United States debt. Let's have a look. United States debt. Budget and debt. Compare government debt by country. Right. Okay. Just a second. So Japan holds the largest amount of U.S. debt. This is the interesting bit. So if I just go from this, Gemini here, AI, then United Kingdom, then China, Cayman Islands. That's very interesting. It ranks 4th. Oh wow. Okay, a lot of money laundering probably happening. Which, so yeah. Look, visual cam. There we go. Let's have a look at this website. Because the trading economics did not give me anything. So yeah, Japan, of course, reject all. Japan is the biggest holder. So imagine this, that if, we start seeing increases in interest rates, then we will see an increase in treasury yields, Japanese treasury yields pushing higher. Yes, we saw a correction on Friday. But in general, the tendency, the trend, you can kind of see it, So why to hold U.S. when you can put it kind of domestically and keep it there? So there could be a huge outflow of, a huge debt kind of liquidation from Japan. So U.S. debt liquidation from the Japanese side. So in a way that could kind of cause some issues, for the U.S. in a way. So, that's one of the things that probably they're negotiating. But anyway, if that happens and, they start putting money into the economy, the first initial shock, I think, in my opinion, could be still negative. However, in the longer run, maybe that could play out nicer for Japan. Again, maybe I'm wrong. We need to kind of look into this a little bit more. But certainly, this is something to keep in mind. So whenever Japan kind of increases interest rates, that's a big thing. So Japan let me just check Japan interest rates. Interest rate, there we go. So we're currently here, right? And if we look at historically, the last time we saw major kind of numbers here was back in before 2000s, right? In 2000, look at this. We kind of went 0 and that's it. And it helped stimulate the economies for 25 years. Japan really kept their interest rates low. Now we are at levels. You see, look at this. We're at levels here, and 0.5. So last time we were above 0.5 plus 0.5 was back in here 1995 September. So we were still 1995. So 30 years, ladies and gentlemen. For 30 years, the Bank of Japan kept interest rates below plus 0.5, and now we're stepping into a new era, in my opinion. If the Bank of Japan is going to increase interest rates in December on the 19th, wow, a very, very interesting Christmas and a very interesting New Year it will be. January, I think, will be quite a spectacular month. We'll see, of course, how it plays out, but certainly I think the initial kind of issue could be a negative one. But then we'll stabilize, of course, but keep an eye on that because this is quite important. The Federal Reserve interest rate decision, yeah, that's kind of important, but I think right now the crown is on the BOJ's head. So coming back to the story here of Nikkei, look, for now, yes, it's kind of looking still bearish. Don't get me wrong, it still looks quite bearish here. We're trading below this downside line, and in a way, as long as we stay, inside this pattern here, this descending triangle pattern, I'm not really doing anything. Once I start seeing a clearance of one of the sides, then I'll consider the next short-term directional move. Shanghai Composite, boom to the downside, ladies and gentlemen. Look at this move. Technology is the worrying part, and this is something that I kept on talking about, and I will continue talking about this because this is a big thing. In general, the market kind of came to its senses yesterday, in my opinion. I really was kind of, I was, in a way, I wouldn't say happy, but I was happy that the market kind of understands that, not everything is gold what shines, right? Not everything what shines is gold. That's probably the correct form of that saying. And look at this, the technical picture looks very interesting. We broke the upside line, we cleared that, and to be honest, it's opening the doors to some further declines. It's so far so good. I think I'm happy with this outcome. I want to see what's going to happen next. My next target is around the 100-day EMA here, shown as the blue line here on my daily chart. Let's jump into the US. I mean, fantastic. Look at this. I talked about this and I said that, look, we could see a little bit of a rebound here. We could see a push back up. We could test this upside line. There we go. Boom. Fantastic retest and a very major sell-off straight away where we look. The only thing that didn't really work out, and I have to admit, was that I was kind of hoping to see a test first of the 100-day EMA and then a rebound. Well, it didn't really happen. So, okay, in general, the move did happen, but not in a form as I would like it to, to happen. So, okay, I'll take that. I'll take that, and I'm not gonna say no to it. So, but in general, yesterday, look, where is my FinViz here? So yesterday, look at these numbers. So. We declined a lot in then a big decline here on the Dow, almost 1%, Nasdaq 2 with a little bit, and S&P around the 1.5% decline. Now this, of course, yes, it's a major blow here because initially we were rallying, we were big, but then if you measure this, from the peak, for example, on the Dow, when we reached that peak for that day. We dropped more than that 0.8%. We dropped more than around 2%, 2.4%. Look at this major move. I mean, that's from the peak, from the top. So that is a kind of a problem. Yes, this was only around here, around this this percentage here, so 0.84, because basically it closed the previous day here, but then we gapped up a lot. And talk about filling gaps. I mean, this was a major fill of the gap. Look, long story short, for now, what I'm considering here is what we're seeing right now on the cash index. Let me just double check. We closed at around 45,750. We're currently above that, 45,900. So we're somewhere around here, actually near the lows of Thursday and Friday. I think it smells like a negative day. I was one of those who said that maybe we'll see a positive day yesterday in my video in here, in September non-farm payroll higher, but August is a problem. So this is a video that I did yesterday as the numbers were coming out live, the NFP numbers were coming out live. I did a video here, you can check it out. Now I have to say that I was kind of saying that I'll remain positive for the day, and it was initially it was the case, and it was kind of working, but then, like I said, the market did come to its senses, and I think that the fact that market understands that nothing is really that perfect. Look, yesterday, I'll talk about the figures. Initial and continuous jobless claims came out. I mean, everything is around 200 here. I mean, honestly, this data, at the moment, I cannot trust this, because this is just at once we got all this, continuing and initial jobless claims, and it's way too much, and to be honest, it's really, like I said, we need to wait for next week to see, if we can get just a more calm number here to see what's going to happen. But certainly the non-farm payroll figure, that's where that's where the issue arose. The forecast was at 50K. We came out at 109K. Fantastic. It's amazing. Better than the forecast number here. But what I said yesterday in the video, here in this top news video, that my problem is with the previous. Now, in the video which I said that oh, why is it like this? I mean, I need to save this. Save. There we go. In the previous video, I said that was that this basically figure, although on this chart it doesn't show here, but actually we had a revision done. We had a revision done and previously, so it's not the only time that we were in negative zone for this year. So let me just clarify this. So on this chart here on TradingView, it seems like this is the zero line. So this is showing that yesterday's revision happened to the negative side. But if I look at some other sources, now this is where the conflicting part happens occasionally. Let me just go back this week here. Thursday, where's that? NFP, our beloved NFP, non-farm payrolls. If I go into history, because there was a revision this year and it was in July for the July number. So, sorry, for the June number. We got the July figure at 73K. And but then during that release, we got the revision to the downside, minus 13K. Let me just see if this is going to show up here. This is where it should be. So 73K. Now, this is where the problem, and again, this is like different sources. It doesn't show the previous figure. Yeah, this show here, because then this number came out here, then the 22K. The previous number was at 79K. Yeah, there was a big revision, yes, in summertime. If you remember, this is when the Bureau of Labor and Statistics head was fired, because again, you get the numbers in the June numbers where you get like them in 147K. Everybody's like, wow, spectacular. But then the July figure comes out, it's 73K. But then they revise the previous number to minus 13K. Now that's the situation. There we go. So that was the problem, and yesterday we got another negative number. So in general, this is not good, and this is exactly what I was talking about when I was saying that when the government went to just shut down very conveniently in order not to show these figures, and because look, it would be the second month in a row that they have revised kind of it to the not in a row, second month this year that they have revised the previous figure into negative zone. So that's why all these deals in October that we saw between these AI tech giants would be scrapped, because in general the economy is not good, and this is a good example, and this is what I was kind of referring to throughout the whole of October, like that they went into government shutdown very conveniently in order to kind of continue boosting all these stocks here, which kind of sold off yesterday because we finally got the NFP, which kind of showed a little bit of a better picture here. Look at this, AMD as well to the downside, MSFT to the downside, Palantir to the downside. So yesterday I saw this picture, this meme where everybody's like making fun of Michael Burry, and because NVIDIA stock was rallying because they made great results. They showed us great results. By the way, it was a 62% increase in revenue. Let me show you what I'm talking about. Earnings. So this was the Q3. It came out at 57.01 billion. Now, 62% increase. That's in comparison to where we were in Q3 in 2024. That was at 35.08 billion. Now, of course, major jump. Now the question is, can they maintain that? Well. What can I say? For now, it's a tricky one. Like I said this week that the problem is that we have an economy where the whole economy is dependent on one company. And I'm sorry that I said this on Wednesday, that for me, that these are red flags. This is when the whole economy depends on like, oh my God, how will Nvidia perform? I'm sorry, this is dumb. This is really dumb, and this is the news that we were fed with, and this is the information that that AI, and it's all about justifying that AI, that the circle of money that they're lending to each other. This kind of, I call it the big money laundering scheme and everything. But hey, nobody's gonna say that, right? Of course. But anyway, like I said, in general, I think that everybody knows this, and dropping from 195 to all the way to 180, wow, that was a spectacular move. Look at this, 3%, minus 3% decline. And okay, look, today, I'm wondering what's going to happen today, because we are near key support, which is around that 180 zone. If we clear that 180, ladies and gentlemen, I am leaning towards the downside. I want to see what's happening right now. Pre-market, we're currently 181, but I strongly suggest for everybody to, for those who are keeping an eye on the market, on equities, keep your eyes on the on this 180 zone, because if that's going to start, if we're going to clear this, wow, this could open the door to some further declines in a way. This is a very key important area of support, and we clear that, we go towards the 177 territory, which is around the 100-day EMA. But if we clear the 177 zone, ooh, I'm leaning very much to the downside, ladies and gentlemen. Is this a company that's gonna kind of suffer or something? Yes, it will. Is it going to disappear? I really don't think so, unless they're going to decide to wrap up all the operations and suddenly, like, okay, we scrap everything. But then that's a economic failure, and this is going to be like a very big problem in the economy. In general, we are already having problems in the economy, but everybody's talking about AI, how great that is, and I'm sorry, I'm not going to play with that game. Dow Jones Industrial Average, like I said, we had a great decline yesterday. S&P, look at these major falls. Boom, look at these candles. Honestly, like, this is this going to be a perfect opportunity for the bulls to step in? Short term, yes. Am I getting very pessimistic? No, I'm not getting very pessimistic, because for me, look, I saw a clearance of that 6,551 territory. Great, wonderful. We got a hold up below here, or actually not a hold up. We got a drop below this. We closed below this area, and this, of course, kind of points more towards the downside. If we do break the 100-day EMA now on my chart, yep, I'm leaning towards the downside, ladies and gentlemen. I'm going to aim for that 200-day EMA, because this, wow, we have not seen these moves here, and kind of since April, where we dropped below the 200-day EMA on our daily chart, and yeah, we recovered. So maybe we could see something like this as well. Don't get me wrong. I mean, I'm not gonna. I cannot really say that I don't believe in the stock market. No, I do believe, but maybe just in other sectors like healthcare, because let's face it, when the times go rough, healthcare is one of those sectors that kind of performs. So let's see how that's going to play out. NASDAQ, ladies and gentlemen, of course, I do not expect anything else apart from a down move here. And if I look at, if NASDAQ yesterday closed in, 2.15% here, and with a loss of that, if I measure it from the peak, where we were roughly just a little bit above the 25,200 zone, all the way here, not a full 4.5%, roughly 4.5% at least, a drop. Wow, that was a spectacular move, ladies and gentlemen. Yes, from the open to close, from the close to the other close, we did 2.15, but 2.38. Sorry, but this move. Wow, this is like I said, this is something to keep an eye on. Right now, the cash index is rebounding. I think we're seeing a little bit of a move. Let me just double check where we are at right now. So we are rebounding 24. We're above the 24,000 zone. Actually, where we closed, yeah, we're just bang on where we closed yesterday, because the futures continued, the cash index continued to drift lower. So yeah, it's an interesting moment here. So we'll see what's going to happen next. Do I believe in a rebound? I do. I strongly do. Do I believe that there could be more downside? I do. I do believe that. But again, for that, I need to see a clearance of the 100-day EMA, and then yes, I'm gonna, if we do, or not a clearance, sorry, not a clearance, if we do remain below the 100-day EMA here on the daily chart, I'm gonna lean towards the 200-day EMA. That's a big of a move. Let's see from the peak, from this all-time high that we saw in October, at the end of October. Let's see how much we have done already. What kind of a damage we're talking about. Around 8%, ladies and gentlemen. We already did. So another, drop to the 200-day EMA, 12% from this peak. 20% decline. That would be getting us towards the 21,000 zone. And, well, again, this is an interesting period. We were at 21,000 in the beginning of this year, the first half of this year. We were even lower than that. Can you imagine? Like, looking at these numbers right now, at one point, we were at around 16 and a half. So imagine this, from around 16 and a half, we have rallied to the current all-time high. At one point, we were gaining 58% for this year. That was the big move. So in a way, to kind of slash some of those gains. But what about, let's say, the beginning of this year? What happened then? Let me just find the January here, January, December. So this is what I'm talking about. So this is December. This is where we opened up in December. So 21,100. And if we do somehow, imagine this, if we do correct all the way back to the, at the moment we're doing for the year 14%. We were at 24% in the at the peak here. So now we're around like 14% gain for the year. Now imagine this, if we start correcting, let's say, according to all these correction ideas, that if we correct around 20% from the peak where we were we were this year, and from the all-time high, then that could bring us all the way back to the opening price of this year. So it's going to be like a flat gain. So at one point you're having the best year of your time, and at the same time you're finishing the year, let's say in this area. Again, we still have like a 1 month to go of trading. Is this going to be, like I said, a bummer month? Look, I don't want to say anything, but in general, November right now is not looking good here for this one. But to be honest, look at this. I mean, we had a spectacular run for 1, 2, 3, 4, 5, 6, 7. This is the 8 months, 7 months in a row. We had fantastic runs, So November time, there we go. Everything is logical. Everything is technical. So we are seeing this correction lower. Just the question is how much of a correction we're going to get. Are we going to get this big? Let's see, because I don't want to say anything, but certainly there are, I am considering at least maybe a move towards the 200-day EMA, but again, for that, I need to see a drop below the 100-day EMA. And I'm putting the emphasis on technology on the on NASDAQ just because, well, it's the technology that kind of led us here, to this big boom, and it's technology which will suffer. So everything is very straightforward, and people are not stupid. Everybody understands that you have to justify all those capital expenditures, all these valuations of these major companies. You cannot justify that, and so everybody's kind of laundering money through OpenAI. Sorry, laundering money. Investments, deals, partnerships. Through OpenAI. The company's not even public, so major public organizations are pouring money into a non-public company. Okay, are we, okay, this is for the public, yes, which does not know what's happening in a way, but just kind of sees that their jobs are getting cut. So, so anyway, look, long story short, for now, look, from the technical perspective, I'm going to consider a little bit of a retracement back up here, but then if we struggle to maybe move back above the 50-day EMA shown as the green line here, then I'm still bearish on all this. Right. Okay, ladies and gentlemen, let's have a look what's happening with Europe right now. Europe is recovering. That's absolutely fine. So this is where the interesting bit comes in. So this is why I'm saying that we could see a little bit of a recovery today in the market, and so far so good. But the thing is that DAX fell below the 200-day EMA. Look at this, ladies and gentlemen. We're live. This is live trading right now happening, and we are below the 200-day EMA on DAX. I'm sorry that this, unless we get back by the end of the month somehow, basically by the end of next week, if we get back above the 200-day EMA, we stay. Maybe that we'll class that as a little hiccup. But if we struggle to get back above the 200-day EMA, ladies and gentlemen, I think that this is, like I said, this is brewing. This is finally what I was saying. Like, I mean, I'm not. Look, again. I have to give a little bit of a disclaimer here. I am not saying that from here we're suddenly going to crash and stuff like that. No, it might be just seen as a healthy correction, and we needed that healthy correction. Do I believe that AI will stay? Yes, I think AI will stay. Like websites stayed after the 2000 crash, but the initial like valuations, that's what causes the. And I'm sorry, somehow people are forgetting this or something. Only the older generation remembers, but the newer generation, the new traders, the new youngsters who come into the, oh, I sound like a grandpa, honestly. The new youngsters that come into the market, they don't remember that, and they just don't know. Look, I was young as well. I mean, I was not in the markets in 2000, of course. I was still little, but okay, I was sane when the 2008 market crashed, right? I mean, I was in the economy, but yeah, this is the interesting bit that I think that, like I said, it takes so much time, that we get these corrections, and I think that is kind of until the generation passes or something, then and you get this. You get this crash. Anyway, look, long story short, for now, we're seeing a recovery. Keep an eye on this. We're going through some interesting times. So I don't want to say anything yet, but certainly we are, like I said, we're going through some interesting times, and I think that we will see a lot, especially going into next year. The UK, there we go, beautiful decline as well. The UK is a separate story in the next week. Watch this index a lot. Now, next week we're going to have the UK budget, the autumn budget, and it's not going to be. It doesn't really sparkle with the population very much. So I'm really going to be interested to see if you want to see some action. Keep your eyes on the UK FTSE 100 and the British pound. Those are going to be spectacular, in my opinion. Theoretically, should be. The XY dollar index. Look, I talked about it, and I said that overall I'm bearish on this one, right? However, going in, I said that in October, and I'll say it again. I said we will see some moves to the upside, because you need to kind of make the you need to please the population. You need to give that stronger purchasing power to the U.S. consumer, so that they would feel themselves better going into the holiday season. Also, because of they're traveling and blah blah blah. So you need to please the society, and that's where the stronger US dollar comes in. However, if they will continue to try to make the emphasis on trade, and that they want to make produce in the US, they will have to bring the US dollar down. That's my logic here. But still, I believe that this could go a little bit higher. Yes, I do, ladies and gentlemen. Yes, I do. I do believe I'm kind of leaning towards this 102 territory. And if we can, hit that, amazing. That would be spectacular. VIX came very close to testing that 29 zone here. The fear index. So we could see a little bit of a drift back down today. But if the selling will continue, wow, I mean, this could be popping above 30 here. Let's jump into the currency world very quickly. I'll try to fly through this. there we go. Look at this. Yesterday, the risk currencies like Australian dollar, New Zealand dollar did feel the heat, and there we go. We broke the triangle here. We broke the squeeze, and we broke through this upside line. So what I said to you, that I'm going to lean towards the downside if we do break through one of the sides here, for the lower side here. If we do break through the upper side, great, I'll go higher, but you broke here. There we go. My next target is the 0.6415-ish zone. That's what I'm going to aim. And if that gets clear, then yes, I'm going to go further south. But at the moment, I'm cautiously bearish here. But yeah, I'm leaning a little bit more towards the downside. AUDJPY, certainly. After a spectacular move here, where we reached my target, I talked about this area right here. Look at how well we reached this area between the 102.40 and 62, 61. We hit that, and yesterday we drifted lower. So Japanese yen kind of picked up buying interest, not because of the Japanese stimulus. On the contrary, this is actually a negative thing for the Japanese yen, but it's mainly risk off driven. So it's risk off in the market. Everybody's jumping into something safer. So the Japanese yen comes in perfectly here. Long story short, do I believe that this pair has an opportunity to go back up here? It does. Everything has an opportunity, but at the moment I'm being very careful because we're near key area of support. This was my breakout point to the upside, this 101 zone. If we stay above the 101, I'm going to lean a little bit more back to the upside, but if we do fall below the 101, I'm slowly shifting to the downside. NZD/USD, yep, the same story, drifted lower. NZD/JPY. Now this one is very interesting. I mean, look at this. This is one of, I love NZD pairs. They sometimes give me a better picture of the market and what's happening here. So look, not everything is kind of falling off the cliff yet. So that's why I do believe in a little bit of a rebound in the stock market. I think that they will continue boosting. They will come out with some big headlines right now and saying that, oh my God, like, we believe this and that. So, and the stock market will get fed with this thing. And that's why I don't believe in a total major crash right now, because I think that they will continue boosting. What they'll do is now we'll see this percentage rising because that we need to support the economy. And the only way that we need to do that is by lowering interest rates. And there we go. The stock market could actually retrace back up a little bit. So long story short, I will say this way, that I do believe that like I said, there could be some retracements, and I do believe that the interest rates are going to be used in order to correct the market a little bit. So hey, that's why there is a chance for, like I said, pairs like AUDJPY and NZDJPY still to push higher. And then maybe that's why NZDJPY is not really falling off the cliff here. Yes, we tested this upper side of the range, by the way, where we are right now. So we're currently in this little box here, stuck in this little box, and I think that I need to drag this one a little bit here. There we go. So it's a beautiful one. Has been running since the beginning of June. Wow, since the beginning of June, ladies and gentlemen. If you're looking for some pair where we could see a little bit of a breakout or something, I think that it's NZDJPY is one of those to keep in mind. Let's jump into EURUSD. It's a bit of a madness here, I would say. We did push higher. I think it's getting messy here. I think I need to remove everything and start fresh. That's sometimes the best idea. Look, I have this area here for this 1.1473, which is a good area of support. I think I'm gonna remove. I removed all the trend lines here, and I think I'm gonna stick to actually support and resistance. So 1.1473 is the downside. I need to break below that area in order to consider a move up higher. For the upside, a push somewhere above the 1.1650 could do the trick for a few more bulls here, and I think that this is the better option to consider right now. So yeah, keep that in mind. Like I said, it's quite interesting. We're at very interesting levels at this point. So hey, I'm not going to really touch EURUSD at this point until I see that clearance of some sort. and then yes, we could go kind of from there. EURUSD, like I said, the Japanese yen is picking up pace, but again, let's see if that's going to be sustained. Yes, we could see a little bit of a larger correction back down here, but certainly just be a little bit more on the careful side. Ladies and gentlemen, let's jump into GBPUSD. Yes, there we go. GBPUSD is rebounding a little bit, but we're stuck. We're stuck in this little triangle pattern, in my opinion. We're below this downside line, taken from the high of the 17th of September. What I mean by triangle is basically this little part that I'm looking at. I mean, you can probably draw it, you know, from here to here, and like I said, you'll see this little triangle, descending triangle pattern forming, and yeah, this is maybe not the best picture here, but certainly this looks a little bit more bearish than bullish. But again, a clearance of this 1.30 territory is needed. So keep your eyes on next week on the UK budget. I think that's quite important. So yeah, we'll see how it plays out. GBP NZD, the one that I really like here, and I'm loving the fact that it's currently sitting around this area. It's near this high, this highest point of April. That's, you know, the big problem that we had in April with the big board of tariffs, I call it. And we're currently here, so we're not really moving away too much from it. And I'm now curious actually if this is gonna push further north. To be honest, for this, you know, this spike happened because, you know, we got the tariffs and the market was fearful. So if the market is fearful right now, then we should be seeing, theoretically, a further push north here above this 2.35 zone. And if we can then, yes, we could go to the upside. But hey, let's not rush into things, okay? Let's go slowly on this. So for now, I'm just going to keep an eye on this one, but something to keep in mind. USDJPY, beautiful retracement back down. So far, so good. This is working out nicely. I talked about this. I said that if we do push above the 154.80 zone, I'm going to go higher. Kind of, oh, I wouldn't say mission accomplished, not yet, because I was kind of targeting this 58.90 zone. I still like it. I still believe that we could travel there. So I'm not going to rush into conclusions yet, but certainly, until we remain above the steep upside line here, I'm gonna stick to the upside, and then we'll go from there. USDCAD chef, beautiful break above this downside line. And now the question is, yes, if we can move towards the 0.8124. And for now, I am sticking still to the upside a little bit on that one. Let's jump into commodities, ladies and gentlemen. Gold, ladies and gentlemen, gold is making its way to the downside, or actually made its way to the downside. Beautiful decline here, but look at this. We're still in this pattern here. We're still in this little triangle pattern. We're in the squeeze, we're in the symmetrical triangle, so we need a clearance through one of the sides in order to go to the next level. But look at this perfect hold up here, you know, so I'm not really excluding the downside scenario, but I'm not excluding also the upside scenario here, because if it holds above this upside line, then certainly there is a good chance of a move back up. So maybe we'll get ourselves a beautiful roller coaster ride, ladies and gentlemen. So yeah, keep that in mind. Yeah, for now it's for now we are gonna just kind of, I would say, remain careful at this point. Okay, we're gonna remain careful, and if we do kind of stay above this upside line, then maybe a little bit of a rebound back up could be possible. Silver, beautiful decline, now beautiful break of this upside line. So in general, if you're asking me like why the hell you know, commodities are why the hell are commodities, these precious metals, are selling off if you know, everything is, if the equity world is selling off, well, shouldn't it be a safe haven? I will repeat the same things that I have said before, that whenever there's a bad moment in the economy, when the times hit hard, you need to get some cash. Governments need to get some money straight away from somewhere, right? You don't want to switch on the printing machine. You tap it into your reserves, and in your reserves you find gold. Imagine this. So it's better to liquidate that, and you know, it's better to and get the money from there, because you can still buy gold later on. You can still make those purchases, inflate the price, and everybody's happy, right? So that's what I'm saying. So be careful, with that opinion that if the equities go down, then you need to buy gold. No, on the contrary, it can be, where it can work the opposite. Platinum, let's have a look at this one. Platinum looking good. I like this one to the downside, but I need a stronger move here, to be honest. I mean, through this territory, through this 1,500 zone. Palladium, okay, beautiful. 1,300, oh, look at 1,350 again, boom. You know what? I like Palladium more. I probably the most. I like silver, but I like Palladium the most. And I'm somehow a stronger believer in Palladium in the longer term. But in the short run, I think it will have a negative effect, together with the rest of the metals, if those start to sell off. Copper is stuck here, still in the range, not really selling off very rapidly. So I think that there is still an opportunity for the bulls to step in. So we'll keep an eye on that one. Let's jump into oil. Certainly my favorite one. My favorite oil is to the downside. As I was, I kept on saying I'm bearish in oil. I will remain bearish for now, and it will remain bearish for oil for now. And certainly this is, like I said, this is justified, because at the moment they can talk about sanctions as much as they want on Russia, but the problem is demand. There's low demand for oil right now, and everybody's kind of, in general, and we have an oversupply of oil as well. So low demand, oversupply. Hey, there we go. Brent oil, there we go, drifting to the downside. Yesterday I did a little piece here on Brent crude to our VIP clients, and basically I said that, look, we're in a falling little channel right now, right? Falling downside channel. So that means that the trend could remain to the downside while we remain inside this channel. However, on the bigger picture, slightly bigger picture, it could be part of a bullish flag, which means that breakout to the upside could happen. However, while we remain in this pattern, still the trend could, remains to the downside. So it could still drift lower. Overall, I'm still bearish, because look at this, the trend remains to the downside. So it still is lower. So let's not rush into conclusion, okay? Because again, at the moment, it's a period where we don't know what's going to happen next, and it's a little bit shaky. So there are, like I said, there are some rumors that maybe we'll see a conflict in Venezuela. By the way, most likely this is what the one country in the world can do whatever they want, right? They can invade whoever they want, and now they're planning to invade Venezuela. I mean, honestly, if you think that nothing will happen in there, well, you start digging in deeper, because you understand that Venezuela has the biggest oil reserves in the world. Big U.S. corporations try to go in there and try to help extract oil, but Venezuela did not agree, because it's a threat to national security when the U.S. companies come in and try to drill your oil. So that's why, like I said, and the current president is not really favorable for the U.S. government. So that's why, like I said, there could be a bit of a conflict in there, which, to be honest, I don't know. Like it doesn't look good, and I think that's. This may cause a lot of issues. Look, long story short, then we could see, yes, oil spiking, because of that conflict. So at the moment, just be careful, be cautious. However, if oil does, like I said, if we do see that conflict, I think that unfortunately oil could spike up higher here. And maybe this idea of a bullish flag could work out, but let's not rush into conclusions, okay? First, let's see what's going to happen. Hopefully nothing happens and oil continues to drift lower, you know, because we don't want any conflicts. However, it's not for us to decide. It's always for them to decide. Anyway, so natural gas, yep, still pushing higher, and I think that it will continue pushing higher. I'm aiming for that psychological 5 level, and I think that, yeah, that's what we're gonna see. Ladies and gentlemen, let's quickly pick up on crypto, and I'm going to wrap up this session because I already overextended. Bitcoin, there we go. So far, so good. My target has been reached, 83,000. I talked about it. Boom. Boom. We reached the 83,000 zone. There we go. Now what's next? Ideally, I would love to see a push towards this area, towards the 74, 75. You know, okay, understand, you know, the appetite rises while you eat, right? So if I just try to see a retracement here and all the way to this point, we'll see that we have done, oh, it's a little bit, 78.6 already. We actually dropped below the 78.6. Okay. Let me get rid of that. So in that case, actually, you know what? I need to fix this Fibonacci a little bit. I think it's conflicting with the gray colors of my... what if I do a little blue line here? Maybe, or actually, you know what? Maybe actually more of an... no, I need to fix the lines here, I think. Yeah, I think it'll be better. Actually, you know what? Let's get back the colors that I wanted. So I think I need to go in here and do styles. Yeah, this is the trend line. Okay. Anyway, I'll have to play around with colors here because this is a little bit conflicting for the eye. Anyway, but look, I will say it this way: as long as we stay above the 83,000 zone, then there is a chance for a rebound. But given the fact that nothing is right now in favor of these assets, just riskier assets, then, and the dollar is strengthening, then further declines are possible. 74,000 could be an option. In my opinion, this is a good area of support, the lowest point of April, the current lowest point of this year. So why not? Hey, why not to travel there? But I will only consider that move only if we do drop below the 83,000 zone. Bitcoin Cash, yep, a beautiful move to the downside. There we go. We cleared my triangle. I talked a lot about this. We cleared my triangle, and we're, like I said, and now I'm sticking to further declines. Well, at least towards the lowest point of October, towards the 445 zone. Ripple dropping below the psychological 2 level, boom, to the downside. Look at this. Look, eventually this will be quite interesting to pick up, but I think that we are getting into this. Somebody said that, you know, this crypto winter could be the case, but look, when we fell back to these levels before, this has been picked up here near this 1.5 zone. I think this is a good target, you know, because these are, I think for Ripple, these are the new norms. I think that these are the new norms near the 1.5 zone, because previously, before somebody got inaugurated, we were just kind of 0.5, you know, bouncing around here. This was the norm. Now we're establishing new norms. 1.5, I think this is going to be a new norm. And if we hold strongly above this 1.5 zone, 1.6 zone, yep, there could be a nice opportunity for this one to, you know, jump back up. Ethereum is drifting lower to as well. So we fell below that psychological 3 level finally, so 3,000 zone. So great. And like I said, I'm also targeting now I'm going to target this 2,000. I do like the idea, or closer to that, and then we'll pick it up from there. Litecoin, one of my favorite ones, and it does still have room to the downside, but again, I am being very careful, very cautious. I do like this one around 50, 60. I think it's I think it could be quite good around here to pick up, but again, you know, we'll have to see how, based on the price action. Dogecoin continues to slide, but it's actually near a good area of support. This one is right here, 0.14. So let's see if it's going to hold. If it's not going to hold, we have a bit of Houston, we have a problem. Polkadot. Now, Polkadot also, I'm loving this one actually. It tested this area, 2.35. but we rebounded slightly. So now the question is, can we see a rebound here? I don't want to rush into things, certainly, but of course, let's see if we can rebound from this territory somewhere. Tron, one of my favorite ones. This one actually is a currency, you know, so this behaves like a currency. So we're near key support, near the 0.2764. If we do drop below this, by the way, this worked out ideally. I was aiming for this. Now my question is, can we travel all the way towards the 0.26 area? This is going to be my next target if we do clear and stay below the 0.2764. And then we'll take it from there. With the upside scenario, I'm going to leave that for now. I think I'm going to pick up a later stage. Ladies and gentlemen, that is it. That is a wrap for this session. I wanted to quickly run through the markets. I mean, again, this was a big, like I said, a big week for everything. And I think, yeah, I think we all kind of went through something extraordinary, and the markets are finally, you know, drifting a little bit lower. From, again, correction. We can say that, yes. Correction lower, and let's see how deep that correction will be, because at the moment we're seeing a little bit of a recovery in the stock market, in the equity world, but actually in video, because we opened up already. 100, yep, around 181. So we'll see if NVIDIA stays today above 180. If it does, okay, maybe it'll build a little bit of a rebound back up. But if it doesn't, I am kind of leaning towards slightly lower levels, ladies and gentlemen. And on that note, thank you very much, everybody. I hope you found this useful. I hope you found the session useful. And look, join me on Monday. Don't forget to subscribe to this channel, because again, I'm going to be releasing another little video soon. So yeah, hopefully you enjoyed these sessions. Thank you very much for watching, listening. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And please promise me, take everything with a little bit of a pinch of salt. Don't trust all the headlines that are coming out. Just kind of, you know, and keep a cool head, and you know, try to think realistically, not pessimistically, realistically. Thank you very much, and I'll see you later. Bye bye.